Hi everyone, and welcome to Tuesday. And we are going to obviously take a look at the performance of the NZSX 50 for last week. Now, just before I share my screen, I do have to do the housekeeping, which is that this is for educational purposes only. It is certainly not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. So let's take a look how our main board performed for last week. Right, you can see here I've got the NZSX 50 up on the screen. And for last week, the market did close up, which was great. There's still a lot of downward pressure though. You can see by these volume candles down the bottom here, they are red, which means there is still a lot more selling than buying happening in the market. Although last week, like I just said, we did have a positive week. All it's really done is closed back up to where it opened the week beginning the 17th of March. So there's still a lot of uncertainty out there. Now let's just put my moving averages on just to see what they are showing us. So remember, I use the 30 exponential and I also use the 15. And like I've said before, there's no magic with these numbers. They are two that I constantly use. You can use any combination of numbers that you like, but the big thing is actually just staying consistent with those numbers. Let's move my screen across, and if I zoom in a bit, you can see here that those moving averages have pretty much crossed to the downside, meaning the 15-week moving average has crossed below the 30-week, where it's right on top of it. So depending on what does happen this week will depend obviously what is going to happen. But for me, what this means is that I am certainly not looking to enter any new positions into the New Zealand market simply because it's trading below those moving averages. And what generally can happen is that when a market is below those moving averages, it could continue to fall further. Yes, this could potentially be just a bottom phase before we continue up again, but I want to see the moving averages have crossed to the positive. In other words, the 15-week is trading above the 30, like you can see here with through this period when I've got the blue line highlighted. That's what I want to see when I'm looking to enter new positions. I do have existing positions open, and for me, it's about watching how those individual shares are going, because some of them are actually performing quite well. They're not counterintuitive to the New Zealand market, but they are performing well. So as they're performing well, naturally I want to change my stop loss and move that up accordingly. I don't want to just get out of the market because the overall trend is down. There will always be shares that will outperform in different circumstances. So that is something to just bear in mind. If you've got existing positions, I do strongly stress that you look at putting stop losses in place to protect your capital. Now, let's just get an idea. I'm just going to take that 15 period moving average off, and we will just modify that to 30 and make it a 200 because and I'll just change it back to a simple moving average. Now, the reason I've done that is because it's a slow moving average and sort of give us a general picture as to what's happening in the market. So you can see here that basically the New Zealand market has come back to that 200 period moving average. It hasn't crossed below it, but it's certainly very close. So time will tell as to what's going to happen. Now, the reason I've pulled this up is because generally, because the 200 period moving average is such a slow one, it can really indicate bear markets. Hey, only time's going to tell us if that is the case. Market, as you can see, has definitely come down it's pretty much been falling from the end of December this year. And obviously we had a gap, which means when you see a gap like this, it means that the after hours and pre-trading that goes on before the market has opened or after the market has closed has been a lot more selling. So in other words, the market closed on the 17th of February. It closed around that 12,766. And then the following week on the 10th of February, sorry, the 24th of February, I just had my cursor in the wrong place. It opened at 12,536. So that's why you've got a gap. And that's what happens is there are orders that are put into the market after the market's closed and obviously put into the market before the market opens. And they've obviously been selling. And that's why you've got that gap down. Obviously, the opposite can happen as well, where a market can gap up. Now, a gap up under rising moving averages is a very, very bullish sign. Okay, so just keep that in mind. But you can see back here, basically the week of the 9th of May 2022, the market closed below that 200 period moving average, and then it fell further. Yes, it did start to recover, but it didn't actually go above it until about the week of the 25th of July 22. Okay, and then we had a short period above it, just went sideways, then we fell back through again. Okay, and then again, bit of a rally, still below it, below that moving average. It did cross above it, which is great, but it's really sort of hovered, and it's not until around this period here, which was around the 7th of August 2023, it fell back through again. And yes, it keeps trying to test it, and it wasn't until the 15th of July last year that we actually saw the market rise, really close above that 200 period moving average and go and obviously have a little bit of a run. Certainly hasn't been as strong as some of the other markets, like the US market has been very strong, so has the Australian market. Unfortunately, the New Zealand one is not following in the same pattern. So I hope that's helped for this week. By all means, let me know what else you'd like to learn with the share market. I'm happy to do recordings of that if it's going to help you. And come back on Thursday. I've had a really good question come in, and it was around bull markets and what investments are perhaps counter-cyclical to a bull market. So come back Thursday and we'll take a look. But until then, happy trading. And like I say, let me know if there's anything else you would like to know, or even if there's a share you'd like me to review. I'm happy to do it. Okay, take care.